go take a look at the market today for February 25th, 2025, and it was a red day overall. NASDAQ was down at 1.25%. The SP was down about 0.5%, very similar to the market move yesterday, except yesterday the Dow was flat and it was actually up 37 basis points today. So really it was those big tech names really taking it on the chin once again. Tesla down over 8%, Microsoft down 1.5%, Google down 2%, Nvidia down 2.8%. We have Nvidia earnings tomorrow, so that'll be a big market mover. Broadcom down 2.6%, Meta down 1.6%. So the big names, Apple once again kind of hanging in there, flat on the day pretty much. Same with Amazon, that was flat on the day. And you had some strength once again in consumer staples. You had Procter & Gamble and Coke and Philip Morris and Nike and Pepsi up, for example. And you also had strength in healthcare. So that continues to really hang in there. You also had some strength actually on the consumer side. Walmart was up 4%, Costco up 2%, Home Depot up nearly 3%. So that was the market today. Once again, mixed. You certainly have that continued rollover in the Mag 7, which is dragging down the broader market. Now, on the economic front, consumer confidence actually missed to the downside, 98.3, where the consensus was 103. Okay, and this is the sharpest decline since August of 2021. And then on the inflation front, you actually had 12-month inflation expectations tick up from 5.2 to 6% due to obviously the tariff worries. And then you had the Richmond Fed index come in at 6 versus consensus a negative 0.2. So that actually was a beat. But overall, you're getting some stagflationary vibes here with consumer confidence missing the downside, worrying about inflation, even the labor market differential. 33.4% of consumers says jobs were plentiful. That was down from 33.9 in the previous month. So, what you're seeing here is this is an environment where the market is getting a bit worried about the downside in the economy and certainly liquidity. You have Bitcoin down once again, broke the 90,000 handle. This is what I've been talking about for a while. I said, as long as Bitcoin kind of hangs in there, it's kind of a proxy for the broader risk on or a risk off market. And as long as it was holding that kind of 90,000 mark, equities I think could hang in there. But we broke that over the last 24 hours. We're now at 88,600 on Bitcoin. And that means we've broken support. That probably means it heads down into the low 80s. And we'll see if it can kind of hold in there. That will be an area that I'll be watching to see what kind of bounce do you get. How much liquidity is really in this market? We know that we have the debt ceiling coming up, and once they hit the debt ceiling, they're going to have to spend that down the Treasury General account. That actually push asset prices likely higher as long as that debt ceiling fight continues, and it's continuing for the time being. So that's what I see on the short-term horizon. But what you can see here is broadly, I continue to be a bit bearish on the markets. Now, are we going to have a 2022 type of market where, NASDAQ was down 33%, S&P was down 20%? That's certainly possible. But, different markets are very different. And this probably is more of a choppy environment because we do have a president that, pays attention to what's happening over on Wall Street. And certainly there will be those in the administration that wants to keep things together. And obviously the DOGE whole endeavor is getting pushed back by not just Democrats, but those some of those on the right as well. And they probably see what's most on Wall Street are seeing is, hey, if you cut spending too much too quickly, you can trigger a recession. And so they're pushing back a little bit, and there's going to be some infighting there, and that'll be very interesting to watch to see what happens with government spending, because that is now a big part of our economy. And if that gets pulled back too quickly, there can be major problems. So that's one thing I think the market's worried about a bit. Also, obviously, the AI bloom coming off the rose. There's a lot of hype there, and how much money is being invested. There was news over the weekend that Microsoft was cutting leases and they were pulling back on their investment. Obviously, the DeepSeek news is a big factor potentially in that as well. And so there's just, I think, more uncertainty around that space, and that means lack of conviction and a very crowded trade. Think how many people are in the AI plays right now. So I think there's definitely potential for more downside in the short term and even the medium term. It doesn't mean that it has to be a 2022 market. Just be on the lookout for that is a possibility, especially as you get into the back half of the year. That's where I see it more acutely with the refinancing cycle that is ahead. So that was the market today. It's continuation to the downside of the Mag 7.